If you've been investing for any amount of time, you've seen a chart that looks just like this. A complete mess of ups and downs that just leaves you scratching your head. Well, today we're diving into one of those charts. We're going to decode the wild ride of Sky Quarry, or SKQ. We'll break down all this volatility and show you how to find the hidden clues that might just signal a stock's next big move.
Okay, so let's jump right in. Just look at this thing. It is all over the place. And then you have this massive, almost vertical spike right here on September 8th. What on earth caused that? Was it a sign of real strength? Or was it just some kind of fluke? That's the puzzle we are going to solve today.
All right, first things first, before we can even begin to figure this out, we need to get our facts straight. So let's just map out the key moments of this stock's really volatile quarter. So the stock kicked off its journey in early July at just under 66 cents, but then it took a pretty sharp dive in August, hitting a low of about 39 cents. Then, bam, the explosion on September 8th when it just skyrocketed to $1.12 before finally cooling its jets and ending the quarter around 62 cents. Talk about a roller coaster. All that day-to-day chaos, it can be really distracting. So, our next step here is to zoom out. We need to look past all those spikes and dips to find the underlying story, the real direction the stock is actually heading. So after all that drama, that huge spike, the big drops, the recovery, here's the really surprising part. The stock actually ended the period slightly lower than where it started. It went from about 66 cents down to just under 62 cents. So for all that excitement, the net result was actually a small loss. Okay, so how do we prove this with data? Well, we use a cool little detectives tool called linear regression. Just think of it as a way to draw the single straightest line possible through all those messy data points. It cuts through the noise to show you the true underlying trend. And what does it tell us? We get a slope of negative 0.0028. Now, you do not have to be a math genius to get this. A negative number simply means the overall trend is pointing down. So the data confirms it. Even with that monster spike, the big picture momentum was actually slightly bearish. And this is where our investigation gets really interesting. Because when we start digging into the technical data, the clues are not all pointing in the same direction. It's kind of like showing up to a crime scene and finding evidence that points to two completely different suspects. So, which way is this thing gonna go? Up or down? It's like the chart is arguing with itself. So let's break it down and look at the evidence for both sides of the case. First up, let's hear the case for the bulls. This is the argument that the stock price is actually gathering strength and getting ready to go up. So here are the bullish clues. First, the recent price action is trending up faster than the average. That's a classic positive sign. Then you have other key momentum indicators like the MACD and the CCI, and they're also pointing towards building strength. So, put simply, several tools that measure short-term momentum are all flashing green, suggesting the stock might be powering up for a move. But just as we're starting to get optimistic, the bears show up to present their case. And believe me, it is a strong one. There is a lot of evidence that suggests this stock is actually under some pretty significant pressure. On the bearish side, the evidence is pretty powerful. The price is sitting below its 200-day average, and that's a major red flag for the long-term trend. But the real kicker is an indicator called a rune. It basically measures the strength of a trend. And right now, it's showing that the downward trend is overwhelmingly stronger than any recent upward momentum. The bears definitely have a very strong case. So, what are we supposed to make of all this? Well, this quote from the source analysis really sums it up perfectly. The technical indicators are giving us a completely mixed picture. You've got valid, data-backed arguments for both a rise and a fall. Okay, since the momentum clues are basically a mess, we need another way to look at this. So let's try to map out the battlefield itself. Let's identify the key price floors and ceilings that have been containing all the action. Now, in trading, we call these support and resistance, and the idea is actually really simple. Just think of support as a price floor that the stock has a really hard time falling below, and resistance is the ceiling that it struggles to break above. And for SKYQ, these are the specific battle lines. You've got several support floors down here with a really key one around 47 cents, and then you've got several resistance ceilings up top with a big one at 72 cents. So where is the stock right now on this map? Well, it's trading at about 61.5 cents. So it's positioned firmly between those floors and ceilings. And here's a really crucial observation. Notice that the current price is much, much closer to that 72-cent resistance ceiling than it is to the 47-cent support floor. And that tells us that right now it's testing the upper boundary of its trading range. Okay, we've mapped the timeline, we've found the overall trend, we've weighed all the conflicting clues, and we've identified the key battle lines. Now we get to put it all together and synthesize all this info into 3 distinct possible futures for this stock.
So this leads us to 3 potential scenarios. First, the bullish case. The price gets enough energy to smash through that 72-cent ceiling, which could spark a whole new rally. Second, the bearish case. It just runs out of steam and falls through that 47-cent floor, confirming the downtrend. And then there's the neutral case. It does neither, and just keeps bouncing between these 2 levels for a while.
So what's the final verdict from our analysis? Well, given these deeply mixed signals, the most probable immediate future is that neutral scenario. The stock is in what we call a consolidation phase. Really, just think of it as a standoff. The bulls and the bears are locked in a stalemate, and they're both just waiting for some kind of tie-breaking event to give them the upper hand. And that right there brings us to our final question. The battle lines are very clearly drawn between about 47 and 72 cents. The forces on both sides are pretty evenly matched. So the question isn't just if it will move, but what will be the catalyst that finally breaks this deadlock? Will it be company news? An industry shift? A change in the broader market? That is the event that everyone is now watching for.